Hey guys, Sean Pruitt here, president of Kingdom Exploration. Higher than expected crude draw has helped increase oil prices this last couple days. And there's several other things happening here, but I want to focus and make you guys understand why oil prices will remain high. Oil prices are not going to remain high just based upon geopolitical issues, everything else. The fundamentals, the basic fundamentals always win, okay? And we're starting to see fundamentals catch up. The demand for oil has remained high and it continues to grow, beating all the expectations of what others were saying because everybody believed green energy was going to replace oil. Well, here's something you have to understand. Our country was built on cheap, abundant energy. Oil was only $1 per barrel back when it all began. And when oil demand grew and outstripping our supply, we made a deal with Saudi Arabia, sealing the deal for decades of cheap, abundant energy. That's why our infrastructure is set up to import heavy crude from Saudi crude, okay? And so bottom line, America became the most prosperous nation in the world because of cheap, abundant energy alone. Because think about it. When oil prices rise, inflation rises, and it makes everything more expensive. If oil prices today were $500 a barrel, let's say OPEC Plus said, you know what, we're going to cut off the West from oil completely, 100% of the oil. No more oil for you guys, okay? And so a third of the world's oil supply we're cut off from. Oil prices would go to $250 a barrel. It would bankrupt our nation and we would become poor. And so we got the exact opposite of that. We had abundant cheap energy, making our country the richest country in the world. What we're trying to do, what the West has tried to do, and I'm not talking about everyone in the West, I'm talking about the liberals, the left, what they tried to do, John Kerry, their job was to push other countries to use green energy. When they know that we became the richest country in the world because of cheap, abundant fossil fuel, but not green energy. You cannot become the richest country in the world on green energy. If we didn't discover oil and we tried to go green, nobody even knew, you wouldn't even be able to find us on a map. There are many countries that you don't even know they exist because they're poor, because they don't have what we have. And these other countries, they want to be rich. Everybody's heart and desire is to become wealthy, is to become prosperous. You can't do that without cheap, abundant energy. Otherwise, you're stuck with going back to the Stone Ages, and you're having to farm the way they used to farm and ranch the way they used to ranch without today's tractors, without today's technology. Imagine going back to that time. You can't get it done. And the exponential growth from the day we discovered oil to where we are today compared to previous medieval times, the growth just doesn't come close. You can't get it done with green energy, and these other countries are starting to figure that out. You will die without green energy, okay? And so let's talk about some recent news and events, and I'm going to explain why I opened up with that. So WTI crude is trading at $83 per barrel. Brent crude is $88 per barrel. Oil prices climb as bullish catalyst build, okay? And so they're talking about U.S. oil production here. It's looking that it's going to start to decline, okay? Mostly shale, okay? Shale is the fastest declining asset in the world, okay? And these graphs are showing that U.S. stockpiles are declining, okay? Which means that we are using more oil than we're importing and producing, all right? And so a higher than expected draw on U.S. crude inventories, a notable slowdown in U.S. manufacturing that sparked hopes of June interest rate cut, and continuing tensions in the Middle East have added some upside to Brent crude. Now, the more expensive it is to borrow money, the more expensive it is to develop crude, okay? So there's a negative impact on the side of demand, but there's also a positive impact on oil prices because it's more expensive to borrow money, and everything goes up with that, okay? And so following months of overproduction, so Iraq has overproduced by 200,000 barrels a day, okay? So they're producing 200,000 barrels more than their commitment, okay? So they are adhering to that, reducing 200,000 barrels of oil a day. Okay. Egypt halts domestic power needs with drastically declining domestic gas production from Zohr offshore field, LNG exports from May onward. So they're not exporting LNG anymore because they're declining fields. They need it for themselves. Okay. And fields decline. Every oil and gas well ever drilled, it declines. Okay. Every year we lose enough energy, enough oil production to where we need to find a new Saudi Arabia every year. And the search for oil and gas is declining because of the reduction in capital set aside for oil. And the premier fields are depleting and have already been discovered. Okay. So we're not making those massive discoveries anymore for multiple reasons. Number one, they're just not there like they used to be. And number two, there's just less capital being given to the oil and gas industry, thanks to guys like Mr. Kerry jet setting around the world and filling people's heads with how evil oil is and how we need to do our part and putting the guilt on everyone. But people are starting to realize that we just want to feed our family. Good luck to you. So bottom line, oil is remaining strong because people are starting to realize that green energy cannot save us, okay? Oil prices are set for a weekly gain as Yellen sees inflation falling, okay? Crude oil prices may end this week in the green as the U.S. Treasury suggested the weak first quarter GDP data may be revisable as a supply concerns persisted. In the benchmarks do indeed end the week with gains. It would be the first positive week in the three, okay? The U.S. economy continues to perform very well, Janet Yellen told Reuters yesterday, commenting on the latest economic reports. Out of those showed a GDP growth rate of just 1.6% for the first quarter and an accelerated inflation rate of 3.7% and personal consumption expenditures, okay? So Yellen is saying that the economy is doing better than expected. Okay, which drives oil prices tremendously. It's a powerful fundamental for the price of a barrel of crude. But oil is a global commodity. Okay, the emerging markets. Remember when I was talking about in order for a country to grow, you need cheap, abundant energy. And the emerging markets are realizing that, and they're realizing that green energy just isn't where it needs to be in order to grow their economy. And so, if you look here, I want to show you guys something. Okay, so in June of 2014. Oil was $138 a barrel, okay? That's inflation adjusted. Now, if we remove inflation adjusted, if you were in June 2014 today, you would see that oil prices were $105 a barrel. So there's a $33 price increase, which is about 33%, okay? So if you look at today's oil price, okay, let's say today's oil price is 90, all right? $90 per barrel. And if we multiply it times 66%, okay, that's really $59 a barrel. So let's say $90 oil in today's dollars and compared to 2014 is really $60 oil. We had $60 oil under Trump when we were swimming with shale oil and gas, because you got to understand something, because we're producing as much oil as we did under Trump. You have to understand something. We added an additional 7 million barrels a day output, almost another country's amount of oil, like Russia, over a short period of time. Nobody was adding that to their equations. Nobody was calculating that. In 2012, nobody expected this to happen. But from 2012 to 2019, that's a short amount of time to add 7 million barrels of oil a day to the globe. So we were swimming with oil. There wasn't enough demand to sap up all that oil. So we were swimming in oil. And oil prices were $60 a barrel. And today, oil demand is at the highest it's ever been. And in inflation, oil is really around $60 a barrel. The cost for materials for drilling is more expensive than they've ever been before. And we're still dealing with, because of what happened with COVID, the supply chains and everything, all those issues, they're still cleaning up that mess. And so what I'm saying is that it costs more to drill for oil than it did 10 years ago for multiple reasons. And then the demand that we lost from COVID has been regained. The emerging markets demand is increasing because they're realizing that green energy isn't going to help us. Where America became great because of cheap, abundant energy, these countries see that. And yes, some individuals, jumped on the green energy bandwagon because John Kerry was writing massive billion-dollar checks to these guys. He was seducing them to go green. But green doesn't work, guys. You go green, you go broke. Look, nobody has the infrastructure for green energy. If Americans are not buying electric cars and Americans are the richest people in the world, what do you think is going to happen in other countries where they have absolutely zero infrastructure? The amount of money it would take for America to go 100% green, it would bankrupt America. It would strip the GDP. I mean, we would be, right now, I think our GDP matches our debt. We would be 10 times our debt. The debt would be 10 times our GDP. We would go broke, and we wouldn't be able to maintain the infrastructure. It'd be too expensive. It's impossible. Guys, it was a pipe dream. We've been lied to. We've been lied to by the world. And so you look at where oil prices are today. And so tomorrow's energy has not been taken care of. And in the past, we would have invested enough money in oil in order to prepare for tomorrow's demand. The demand for oil is growing. The oil discoveries is declining. Shale oil and gas is on the decline. If you look at the latest charts, shale oil and gas is on the decline. American oil and gas is on the decline. Saudi Arabia assets are on the decline. Saudi Arabia has already agreed that they're not going to expand the way everyone was expecting in oil. They're not making new major oil developments. Why? Because they need that capital to maintain their cause, maintain their country, and focus on their outlandish goals of building these cities and whatnot. They can't do that by spending all their money on infrastructure. And so in addition to that, the less money they spend on oil and gas development, the higher the price of a barrel of crude goes. So they're already producing 10 million barrels a day. That becomes that 10 million barrel a day that they're selling becomes much more valuable versus spending billions and billions of dollars and selling 20 million barrels a day for the same amount of income that they'd make on 10 million. Do you see what I'm saying? And so, and at the end of the day, the Middle East hates America. They are so jealous. They hate us. And we become very rich. Our country becomes richer every time someone buys a barrel of oil because they're using our dollar. Well, that's not happening anymore. People are pulling out of the US dollar. Venezuela is using Bitcoin. Russia's using other currencies. Saudi Arabia, China, they're all bypassing the US dollar. And it's damaging the power of the dollar, which causes inflation. And inflation affects the price of a crude tremendously. And so we're putting ourselves in a situation where shale oil was already not very profitable because it's the most expensive barrel of oil to access. See, there's conventional oil and there's shale oil. Most of the oil that was produced from all of the oil produced from 1920s until George W. Bush was conventional, but they ran out of oil. And so they started going after shale because of shale technology. Fracking techniques opened up the door to access oil out of a tight formation that was never intended to produce, period. Well, where else are we going to go, guys? And so it's getting more expensive. It was already not profitable, and now it's even more expensive. Conventional oil is still profitable if you're in the right areas and you are getting materials at a good cost. They have their own rig. It's still very profitable. But if you're a shell driller today, I don't know how you're surviving right now. It's impossible. And so Saudi Arabia needs $90 oil. Their team and their analysts has already came publicly saying that we need $90 oil. Saudi Arabia is a very powerful influence in the Middle East, and they run the OPEC regime. They control oil prices in that region when it comes to diplomatics. But then you have Iran, who makes all their money from oil, and then you have Russia, who makes their money from oil, who is funding a war. If oil prices go to $50 a barrel, Russia will lose the war. If oil prices crash, Iran will not be able to do the ambitious plans they have. They have a tremendous amount of pride, and it will weaken them tremendously if oil prices crash. And what happens? America becomes richer. America becomes more prosperous under that situation. The Middle East is going to do whatever they can. They control most of the world's oil supply, and they're going to do whatever they can to drive oil prices up, even if it means escalating the war, even if it means shutting down the Strait of Hormuz, even if it means curbing more oil output with OPEC. They're going to do whatever it takes. Saudi Arabia is not investing more money into oil infrastructure. Americans, Shell Oil, these big boys are reducing their capital to develop oil and gas. We're running out of tier two. We've ran out of tier one assets. We don't have enough assets here in America to maintain the growing demand for oil. And every oil well, every natural gas well in the world is on the decline. And our infrastructure is about to be maxed out. In Texas, I mean, our infrastructure for natural gas is up to 85%, and our oil lines and whatnot. Once that fills up, you can't add any more oil or natural gas to those lines, and those wells are stranded. And now we can't even get the rest of that energy to market. In that situation, we can't expand even if we wanted to, and it takes years to do that. And so the Biden administration is seeing that the problem. The green energy pushers agreed to build a plant in Houston to add an additional ability to export 2 million barrels of oil a day. Do you see the gravity of the situation? The green energy pushers caved in and opened up the spigots in Alaska, opened up the door in Houston. They are seeing the problem. And the SPR is at the lowest it's ever been. Obviously, it was lower when they first started it, but in years. And so I'm here to tell you, with the driving cost of oil development, inflation, everything, the days of cheap, abundant energy are gone. And I don't think the Middle East is over. The wars of Middle East, I think it's the beginning. All right, guys, I'm Sean Pruitt, president of Kingdom Exploration. If you like this channel, please subscribe. If you're interested in learning more about oil investing or anything else about the oil business, please look at my description or comments below. All right, guys, we'll talk soon. Thanks.